Hello, my name is Noma from Cripia. We empower you. At Cripia, we offer tailor-made financial services for SMEs in the informal sector and the unbanked. We hope to have a perfect balance between modern technology and African methods of finance. Now, I'd like to introduce you to my friend over here. Her name is Mwaka. Mwaka is a single mom, 35 years of age. She's also a business owner. Like myself, Mwaka comes from a small landlocked country called Zambia, home to over 1.2 million SMEs who account for 87.7% of all employment. Now, Mwaka decides that she needs to scale her business, and if she coupled it with poultry farming, she'll be able to make more than 4 times what she's making today. So she decides to go to the bank to ask for a loan, but unfortunately, she's met with disappointment. She does not meet the criteria for a basic loan because one of the reasons is she has no formal payslip. Now, Mwaka then decides to go to the alternative route. She goes for an MBFI who charges her an exorbitant rate of 74%. Years later, this leaves Mwaka knee-deep in debt, and because she used her business as collateral, her business is almost gone. This is the everyday story of most Zambian SMEs, despite being responsible for over 60% of the nation's GDP. Unfortunately, they do not get a lot of support. The lack of access to straightforward and safe financial services, the high rates, the lack of convenience, transparency, and affordability are critical issues for SMEs in Zambia. But what if I told you there was a solution? At Cripia, we provide tailor-made solutions for Africa's everyday SMEs and unbanked individuals. How? We provide easy, transparent, and inclusive financial products. At Cripia, we believe that accessing money to boost your business should be as simple as making a phone call. An SME owner should quickly be able to use their phone to go onto the platform and access financial services easily in their own language. We have created a criteria that allows us to be able to see SMEs' profitability and their capability to repay on time. An SME will be able to quickly use our eligibility checker, our calculator. We have an inbuilt USSD feature for customers with a basic phone, and this also allows them to be able to check their balance and approvals on time. The platform works on the web and an app. We also have a credit worthiness and building tracker. Our traction so far has been really great. Since we started in February 2020, we've had an average of at least 20 loan applications weekly. We've helped over 50 applicants whom we're creating an SMB program for, and we've partnered with Logic High Science, which is part of the African Leadership Academy, to deliver this. We're due to launch the SME loan product at the end of July with a target of 500 loans at 15% interest rate. This rate came about by looking at the market. The lowest was at 10% and the highest was around 91%. Our TAM, SAM, and SOM figures are reflective of our bottom-up calculation approach. We anticipate a 2% share of that market, which will be a serviceable obtainable market of 900,000 for the 500 loans in our first year. Our business revenue model is really simple but very strategic. The 15% loan interest for 3 to 6 months for loans. We have a $4.99 charge for our village banking product, which will be released later on for individuals, and $14.99 for B2B. Our average calculation is $100 with a lifetime value of $18,000 over 10 years. Our ask. Well, we invite you to help us put a dent in SDG goal number 8, which is decent work and economic growth, because everyone deserves that. By delivering the 500 loans in our first year, by providing village banking groups, we've already got at least on our list over 800 people on the list of village banking groups, creating our digital wallet point data pool, which will allow us to create strategic partnerships, and eventually expanding to Africa will need money. This will allow us to give out more loans, onboard more staff, and increase our marketing strategy to meet the 5-year plan to scale to most of Africa and eventually the rest of the world. Ambitious? Yes, but that is the Cripia way. Our competitive advantage speaks for itself. We're offering affordable rates and a credit scoring system. We're first to market to match particular technology with African methods of finance. We're quick and easy and secure to use, and we offer continuous support and financial literacy, something other microfinances who own over 32% of the market share have failed to do. So we invite you, join us on this journey. My favorite African saying, if you want to go fast, go alone. If you want to go far, go together. Please join our team. Meet my team. Myself, my name is Muma. I'm the CEO. I have 10 years experience in banking. We have a CMO, a CTO, a Chief Design Officer, and 2 project managers. We invite you to share your stories with us, join us, partner with us, and even invest in us. Thank you for listening.
Hello, my name is John Masharia. I'm the co-founder and CEO of Motisure, where we're giving peace of mind during mobility to commuters as well as riders. So the problem is in Africa, traditional personal accident cover is expensive, rigid, and out of reach for the over 600 million commuters, people who commute every day and risk getting into an accident in Africa. We're seeking to provide a flexible, on-demand, affordable personal accident cover that is usually embedded in tickets for commuters and in commissions for riders. So the product is an API-driven platform that allows users to easily and quickly get a personal accident cover through their commute by embedding it in a point of sale. We have some great features such as KYC, policy purchase, claim monitoring, configurations, as well as an API-driven model. So on our business model, we basically have 2 types of models. One we charge per trip, and the other one we charge per day, or per month, or per week. Our margins are around 60. The policy cost is 60%, and we get to keep a margin of 40%. Average revenue per user is $33. The lifetime value is $964, and the card is $4. And the lifetime is 20 years. Then we have a churn rate of 3%. The market is quite huge. In Kenya, we're looking at $1 billion, and in Africa, we're looking at 43 billion, and globally, we're looking at 1.08 trillion. This is off of the 5 million people who is just 10% of the population that make 3.5 billion trips per year. And that brings our total addressable market to 1 billion and our sum to 0.5 billion and our TAM at 0.25 billion. We have a very interesting competitive landscape where we're looking at most of our competitors' potential partners. And the reason for that is that the way we approach this is through an on-demand bundle, flexible and configurable products that has a component of asset tracking. No one else is able to match that, and that's why we think we can extend the same features to them. As we say, technology, flexibility, the offering of the products and the bundling gives us a unique advantage. So something that brings you this is myself, John Masharia. I'm an entrepreneur with a technology background in various startups as a CTO and more than 10 years leading technical teams. Jen Zhao is my co-founder and my COO. She has over 10 years experience in the insurance industry. And Herman Twitter is a CTO who has worked for Andela and as a refinator brings a wealth of experience in tech for startups. So we're starting with the Kenyan market, and then we're going to quickly roll up to the Ghana market, and then move on to the East African market, and then in Q3 of 2023, scale the southern part of Africa, starting with South Africa, and then in Q4 of 2024, we'll be able to scale to West Africa, starting with Nigeria and Ghana. On the financial side, we are operating a very lean team with very minimal budget that enables us to get into the R&D, the customer development and product development. We're seeking to raise $500,000 to be able to roll out into Kenya, and we are prepared to offer a safe environment for that will give us 12 months runway. And the milestone we hope to achieve by this is our fully working end-to-end MVP rolled out in Nairobi and a customer development of up to 20,000 customers. Thank you. Love to hear from you. I'll take any questions from now. Thank you.
Hello, my name is Nixon Onyango. I am the founder and CEO at Sokohela. Sokohela is a digital tools provider for micro, small, and medium enterprises in the urban agricultural value chain. Our vision as Sokohela is to create an efficient agricultural value chain ecosystem whereby the demand side, who are the vendors we are working with, can be able to support the supply side, who are the farmers, for a scalable and sustainable ecosystem that would be able to support the agricultural value chain sector as a whole. The problem that we are addressing is vendors lack timely, customized, and tailor-made short-term credit that's specific to their business needs. We are also addressing lack of financial knowledge and information that can enable these vendors to keep records, save, and support growth of their enterprises. The solution we are giving out as Sokohela is we are offering timely microloans to clients' mobile phones to enable them stock up their businesses. We are also offering financial literacy training through mobile bookkeeping app to enable these MSMEs keep digital business records and be able to easily structure their operations for growth based on the metrics that they generate from the app. Kenya is a competitive fintech country, and we are competing with online lending apps, traditional banks, and microfinance institutions, with leading mobile network operators also offering short-term credit on phones. We differentiating ourselves with these competitors from the market segmentation that we have taken, which is sort of neglected by these main competitors in the market. We also have an advantage which we are differentiating ourselves in the form of the average ticket loan size that we are offering these vendors. What we give is adequate for them to be able to stock up their shops vis-a-vis what the market is offering to their mobile phones, which are sort of consumer loans that cannot be put into business use as far as purchasing stock to their shops is concerned, which can help them to sort of grow. We also differentiate ourselves with the wraparound services that we offering with these loans. We're giving these vendors financial literacy training and knowledge that can be able to help them scale up their business operations. We have so far been able to onboard 1,500 active users on our platform, and in the process, we've been able to give out 5,000 loans to these MSMEs that has enabled them to increase their stock and grow their businesses. We've also been able to give out 200,000 phones, smartphones on hire purchase, which these businesses have been able to use to download our app and keep transacting their businesses and keeping records. We are looking at a size market of 2 million vendors in Kenya alone. And out of these 2 million vendors, we have a serviceable available market of 200,000 vendors, whom we have zeroed down to 55,000 who are serviceable, obtainable. We generate our revenues from the interest that we charge on the loans that we give out to vendors, and we are charging 10% for a 1 month ticket loan. We also get revenues from markup on smartphones that we give out on hire purchase, and in this case, we get a profit margin of 20% on smartphones that we sell to clients. We are also looking at adding airtime, digital airtime, and electricity tokens reselling on a mobile application, which will give us commissions, which we translate into revenues. We are fundraising $50,000 US, which will help us to acquire more vendors and customers on our platform, and also increase the loan ticket size, because it's prudent that these businesses are growing and they require more loan sizes to be able to generate and get stock for their businesses. We're also looking at growing our tech and operations team so that we can be able to scale the business going forward. We are a founding team of 2. I am a agricultural economist, and I've worked as a credit analyst for 7 years before founding Sokohela, whereby we were working with loaning to farmers, and I got first-hand experience with their pain points, whereby they could not be able to sell their produce. And that's why we ventured out here at Sokohela to be able to create an ecosystem of vendors who can be able to support the farming community. My co-founder is a software developer with 8 years experience developing systems and apps. And as a founding team, we are confident that with good support, we can be able to scale the company into bigger heights and be able to support the vendors whom we are working with. Thank you.
My name is Malcolm Castillo. I am the founder and CEO of Amal and Company Limited. Umeme, our national electricity distribution company, has been transitioning and is still transitioning from a postpaid model to a prepaid model. They have also gone ahead to close all their brick and mortar outlets, focusing on their digital channels. So more often than not, the question is asked, so what happens when I need electricity, dead in the night, I have the physical cash? It becomes very useless to me. Or what happens when it's that time of the month when I'm probably low on funds and I just need, a unit or two of electricity to take me through the day, or to take me until I can get until money? Does that mean that not having access to cash should not guarantee me getting a service? So we can look at other scenarios whereby, let's say your mother, sister, auntie, or goes to the clinic going to give birth and electricity goes off. So the difference between life and death can just be 1 second of electricity. With COVID, everything has gone online. The kids are learning online. So what happens when I do not have money to buy electricity that will power the devices or power the internet? You can also look at the environment, whereby whenever there is no electricity, alternative sources of fuel have to be found, like use of firewood, use of kerosene and candles that are dangerous. So all these bring about unnecessary circumstances. So Yasako is a microcredit solution for utilities. So we're mainly focusing on electricity because we believe electricity is a factor of production. We believe without electricity, everything comes to a halt. So Yasako is the platform whereby individuals can apply for a loan to top up on their units. So it's a 7-step process and you have your token. We have partnered with Airtel. So what Airtel does is that they give us access to their USSD technology. So any featured phone can work. You dial *185#. They also give us data for credit scoring, so we know who qualifies and by how much. Access to their subscribers, who are about 6 million subscribers, and also a mechanism for collection of the loan amount plus the service fee. So of course, the market we are targeting domestic and commercial electricity users who are on the prepaid system, of course. As per the Umeme report of 2020, they collected about 1.7 trillion Uganda shillings, of which 26% was attributed to the prepaid system. So even if we just get 1% of that market, we can be able to have a very good year. So we're looking at replicating this service, of course, in TZ, in Tanzania, in Zambia, Malawi, Ghana, Nigeria, and the other African countries where they have prepaid systems in place. So the competition landscape is we have MTN. MTN has a mobile money service where users, their subscribers can borrow funds. They can borrow from as little as 3,000 to 10,000 for 30 days at 9%. You have Airtel with Wewole. You have the banks with their instant money services as well. And then you also have us. So So our business model, of course, we are offering the service to customers, the last users, and also to businesses that have prepaid systems in their businesses. So we are looking at giving from as little as 2,000 Uganda shillings worth of electricity, that's $0.5, up to 10,000, that's $2.7, and we're charging 15% service fee for 30 days. Of course, we have a revenue share with Airtel, where we both take 50-50. So the current traction we have so far is that we have signed a contract with Airtel that's in place. So we have completed the integrations. So we're piloting the service. We've been piloting the service since last year, March, and we are planning on a mass launch where we are going to target 1 million Airtel subscribers. So we currently have 100 users who are using the platform on a monthly basis, and we also have a default rate of 1%. So we are raising $200,000. We're raising it for operational capital. We're going to have a fund through which we can, of course, meet the requests that come in for marketing and growth, 5% of that, of which we are also going to leverage on what Airtel has in place so that we can launch this product to the masses. And then the other 5% for administration, research, and development of the product. So we still have to fine-tune our credit score module and bring other talents on board. So the roadmap for us is that we're looking at also, after a year of operation, we want to change and have dynamic service fee, whereby the client can choose to pay on either a daily basis, a weekly basis, or a monthly basis, so that the service fee comes down from 15% to either 0.5 to 2 to 3%, something that they can manage. Then also get other electricity generation and distribution service providers on board. And then we offer this as a payment option for their users, and also the same thing for off-grid, for solar energy, to offer it as also an option for their users to pay. And also increasing it to other utilities like water, power, among others. So of course, our secret sauce is that we have the first movers advantage of about 2 years, but of course, technology being what it is, we cannot be naive to think it can be that long, but we do have a lead on our competitors. We do have a committed team, the A team, focused, determined, and goal-oriented. And of course, the partnership with Airtel gives us an edge. So the team is led by myself, Malcolm Castillo. We have Chris, who's our marketing officer, Daniel, who is in charge of the technology, and Franklin, who runs the numbers. So our advisors include Linus, who helps us with the daily operation and general strategies for the service. Santiago was very instrumental in the credit score, Mojo, and also the financial analysis of the service, and Robert, being a veteran of the microcredit space, currently working with our Centenary Bank. So thank you, and yeah, I'm open to any questions.
Hi, my name is Eleutherius Juma. I am the CEO and co-founder for Payland Africa. In Africa, many shops have experienced started growth over the past decades. This is due to the fact that these shops lack a proper way of recording their transactions that they perform on a daily basis between them and their customers. Payland has offered a solution to these premises by enabling them record their credit transactions on a digital platform, and as well help them record their cash transactions on the same platform. With this, these shops can understand their exact value and stand a chance to get funding from financial institutions, and also get credit from Payland itself that will help them propel their business. The value of this problem in Africa alone sits at 500 billion, which is the worth of retail transactions back in 2019. As well, the population in Africa currently sits at 1.3 billion people, and this is set to increase to 1.8 billion by 2027. Also to mention, the target MSMEs in Africa sits at 100 million enterprises, with 40 million in Nigeria, 2 million in South Africa, and 7+ million in Kenya alone. How the product works is that a shopper simply subscribes to a shop at a fee whereby this fee is shared between the shop and Payland, where the shop gets to keep 30% and Payland gets to keep 70% of the subscription fee. Once the shopper subscribes, the shopkeeper sets a limit for them, say 500 shillings, which now the shopper can access goods worth this amount during the set subscription period or until they exhaust the limit amount that they have been set for by the shopkeeper. On top of this, Payland has also built other tools that will help the shop and the shopkeeper and the shopper as well within the Payland ecosystem. Jazza Services is an inventory tool that will help the shop restock and manage the inventory. Changisha is a platform that will help the users in crowdsourcing funds and fundraising within the Payland ecosystem. But a voucher is a utility locking feature that enables users and organizations to lock funds to a specific utility. In terms of competition, we have Fuliza, Branch, and Tala. Our competitors charge an interest to their customers, whereas in Payland, the credit offered by the shop does not charge any interest whatsoever. Also, to mention, Payland has a utility locking feature where funds are locked to specific utility, whereas the competitors do not have this. Also, Payland is data-driven, and the data that Payland acquires from the users and the system itself helps in determining the credit worth of these shops, the credit worth of the users, hence reducing the number of non-performing loans by offering credit that is informed to the customers. Also, to mention, Payland is more focused on the shop and the growth of these shops. Ideally, this is not a feature that is present in Branch, Tala, and Fuliza, which are our main competitors. In terms of traction, currently we sit at 6,000 users and 2,000 shops within Nairobi, Kenya. We also have 20 organizations, and we are currently onboarding 900,000 plus students through a partnership with the TVET. Also, we have Miramar and Anster, who are suppliers on our waiting list, waiting to use our Jazza Services tool. In terms of revenue, we generate revenue through Okoa Shopping, which is the subscription feature, by taking 70% of the subscription amount that the shopper subscribes to the shop. The other services, including Changisha, Pata Voucher, and Jazza Services, we charge a commission worth 1.5 to 5% depending on the service that the customer is using. For the roadmap, currently we are predominantly present in Kenya, but looking to expand to other markets including Nigeria, Zambia, Tanzania, and South Africa by the end of 2021. By 2024, we're looking at rapid growth, intense research, and globalization. Also, before 2024, we are looking at tokenization of our transactions, adding logistics into our ecosystem, and also expansion to other African markets and AI integration into our system. Our ask for today is for the investors to join us in our quest to build local economies as we become Africa's first fintech to digitize the diverse financial cultures in the continent. During this seed round, our ask is 1 million for a 10% stake at a valuation of 10 million. These finances will propel the company's projection to achieve 5+ folds over the next 2 years. For the team, we have Bendon Murgor, who has been an entrepreneur since 2004, and he has currently decided to build products of his own, starting with Payland, and is currently the CTO for Ada Labs Africa. We also have John Kamara, who has worked with Google, Yahoo, and EA Sports in the late 90s and early 20s before setting out to be an entrepreneur, and is currently the CEO and co-founder for Ada Labs Africa. And also to mention, he is an award-winning entrepreneur in Africa. Also on the team, we have Irene Kiwia, who is the CEO and co-founder for Frontline Media in Tanzania, and also has successful startups to her name, including Ikoba, Tour, and Ada Labs Africa. If you wish to reach us out, you can reach us out on any social media using the handle @mypayland. Thank you.
Hi everyone, my name is Edgar Mwambutsa and I'm the co-founder of CoinPesa. CoinPesa is a digital asset exchange focused on cryptocurrencies, and we're promoting a financially inclusive Africa. From the days of barter trade, money has evolved over the years to fiat money, debit and credit cards, and digital currencies, as most of us use today. The document you see on the screen is a statutory instrument, which is delegated legislation by government on a particular sector. And in this case, being blockchain. So if you're a startup or a company in the blockchain space, you basically operate for some period of time without paying taxes. And we pushed for this through our blockchain association and also working with the government task force on blockchain. The problem that we identified on the ground is like most platforms are not localized. We were the first locally owned crypto exchange in the country, and the ones that were there, our pricing marking up to 40%, and there was basically no understanding of digital assets beyond speculation. As a solution, we integrated with local payment methods like mobile money and cash in and cash out agents. We built a platform specifically for educating the masses. And we, as a business model, we generate most of our revenue through transaction fees on the platform, deposits and withdrawals, and also trading and transfers on the platform. And we grew up to about 2,000 users in the first 5 months back in 2017 from the start. And there was about a 300% month-on-month growth. And the average revenue per user per month was about $5. And our user loyalty grew up to about 4 times on the platform. Our go-to-market strategy, we launched the CoinPesa referral program, and we were also working with the existing agent networks like MTN and Airtel. We built our platform with a bit more options than our existing competitors like BitPesa, Local Bitcoins, and Luno, which has also come into the East African market. We're still a lean team with some extra support staff other than these that you see on the screen. And in 2018, we made it for the Startup Bootcamp Cape Town. We emerged among the top 20. We pitched to the SBC partners like Nedbank, PwC, Old Mutual. We were not successful to get funding that time round, but we still have our heads high. We've worked with a couple of NGOs in South Sudan. South Sudan, most of these NGOs are not able to receive money from the bank because of banking sanctions. So they receive donations through cryptocurrencies, and we are able to cash out these donations on our platform and also through our existing over-the-counter platform. These NGOs are feeding people on the ground, refugees, and doing a lot of community work in South Sudan. For us to continue operating, we were decimated by the bear market in 2018. We're looking at about 200,000 USD. 30% of that will go towards float or liquidity. 20% of that towards technology to improve and upgrade our platform, and 50% of that to marketing and operations. I thank you all for your time. God bless you.
Hello, ladies and gentlemen. My name is Sam Degwa. I'm the founder and CEO of Safer Solutions Limited. We're a fintech based in Kenya, running a payment platform called Liversport. Liversport is designed to meet the needs of small businesses, especially retailers struggling with manual payments and processes. So how did we get into payments? We identified 4 key problem areas. 1, the predominant use of cash. A major objective of digitization is to transition from cash-based business models to cashless or digital payments. Second problem we identified, in Kenya, we have a highly digitized consumer and retailers who can not take digital payments. Third problem, those with the technology are inundated with multiple pieces of technology and devices. It makes it very difficult for them to process payments. Lastly is financial exclusion. We know that the government is pushing for financial inclusion to make sure that all its citizens have access to financial services. Having identified these gaps, we decided to build a platform, integrate with government services, banks, and mobile network operators. We created an application and embedded their services on it. We recruit agents and merchants, equip them with an app on phone or POS, and we give them financial incentives that allow them to deliver electronic and payment services to their consumers. Our app has 4 functionalities. There's a make money functionality. The retailer makes commissions from airtime, bill payments, revenue collections, agency banking, etc. However, we go beyond making money to giving the retailer the ability to order goods and services and pay for them on the same application. The receive money functionality you see there in the green button is our way of transitioning the agent to cashless transactions, the ability to receive cash, card payments, mobile money payments, etc. Finally, we have to give the retailer access to his bank account or to his mobile money account for him to purchase float. If he doesn't have either, then we can offer him a loan. We have 2 types of competitors, direct competition and indirect competition. We look at our competitive advantage in 3 ways. 1, the solutions we have built are based on retailer needs and behavior, versus using the retailer as a channel to push products to the end user, as the competition has done. Secondly, we have taken an aggregator approach versus a closed loop model by the competition. And thirdly, not least, our focus. Agency model is our core business versus a value add versus the competition that uses this model as a value add service. We've gained traction within the first 2 years of inception, and we've successfully recruited 1,000 agents. We initially worked with an outsourced partner, but unfortunately that didn't work well, as you can see in the year 2018. However, this was a major reason and a major incentive for us to build our own platform. We've continued to generate revenues from other services. So what's the target market or the size of market that we're targeting? According to FSB Kenya, there are about 1.5 million licensed outlets in Kenya. Those that we believe are serviceable, obtainable outlets are about 200,000. 53,000 of those are bank agents, and they're shared among between the top 3 banks. 157,000 are M-Pesa agents. We're targeting 5% of the serviceable, obtainable market, which is about 10,000 agents in 5 years. That number may look small. However, if you If I take you back to the M-Pesa agents, it has taken Safaricom 13 years to acquire 157,000 agents. Our business or revenue model, or how do we make our money? We negotiate with the service providers and we share the revenue with the agent. Our income is therefore a factor of the services we offer on the platform and the size of the agent footprint. From my experience, we should be able to yield $12 per agent per month, up to about $20 over the next 5 years. So from our conservative projections, we should be looking to earn about $2.4 million by the end of year 5. So what are we looking for? We're self-funded to date, and we're looking for an early investor for a $500,000 investment for 25% stake. With that money, we will aggressively push the solutions to market here in Kenya. We will enhance capacity and secure and certify the LipaSport platform. We will build capacity in the staff and operations of the business, and as well establish a strategic relationship and integrations with 2 banks that we're already in talks with. We're also open to a strategic investor who will help us achieve everything we strive to achieve in the first phase. But more importantly, the strategic investor comes to help us scale into other territories in East Africa. So come and join us as we pursue this exciting journey into the future of fintech, to the future of banking as a service, embedded finance, or open banking. We look forward to hearing from you. Please contact us on the address below. Thank you.
Hello, my name is Samuel Njuguna, and I'm here to present about a savings application called Chums. So what is Chums? Chums is a mobile-based savings and investment application that is geared towards the mobile money market in developing markets. And it uses behavioral psychology techniques to assist people to save. The key problem you are solving is that only 15% of people in sub-Saharan Africa have, save with formal institutions. And the reason why it's the case is, one, the cost of saving, cost in this case being one, the banks being sparsely present in most African areas means people have incur an actual cost of moving from one location to go and find a bank where they can save. And then two, you also have the actual cost or the fees they pay for them to commit money in one account for saving. Two, there's incorrect beliefs around savings where people think that you need to have huge ticket sizes of money to save as opposed to starting to save with small amounts. Three, there's a gap that lies between the intent and the action. Again, this is very similar to the way you exercise, whereby you find yourself, it's very hard for you to move yourself from the idea of you exercising all the way to the goal of achieving you're aiming at. So that gap in between there is what we're calling the chasm that lies between intent and action. And then last but not least, there's lack of feedback mechanism approaches. And we see this most with banks, whereby they expect you just to be depositing money in an account. Yet what happens is when you are saving, most of the time you save towards a goal. And you need to see how you are performing or where you are relative to where you are working towards achieving or arriving at. So what's the solution we have? We came up with an app called Chums that utilizes behavioral psychology to enable you to save. And the way we do this is, one, by having visualizations that show you how you are progressing in terms of saving, research around behavioral psychology such as social nudges, where we have seen people save more as a community. So we have added the feature where you can save as a group. Three, there's intelligent alerts model, whereby they advise you to save based on your everyday transactions. There are gamification features whereby they show you how you are saving relative to your peers. Again, that triggers you or motivates you to save more. And then you have things like great UI user experience, whereby we enable you to save in just under 3 clicks. So this is just an overview of the app, the screenshots, how it looks like. It's very easy to use, and it can also be deployed even on the simplest of smartphones. In terms of competitors, what we have seen is their telcos introducing their savings product, such as M-Shwari here in Kenya. And then you have what we call neobanks. These are apps, that utilize smartphones for them to save. We have seen introduction of this. In Kenya, we have one called CBA Loop by CBA Bank in Kenya. And then last but not least, we have banks that overlay the savings feature on top of mobile money. An example here is KCB M-Pesa in Kenya. The bank having partnered with a telco to provide that. What's our key competitive advantage is that us as Chums, we have been given the green light we are the first to be given the green light to offer a savings application, purely savings application to the public for them to save. 2 is that we did a lot of research to understand this space, and around behavioral economics and artificial intelligence and behavioral psychology. That's what we're utilizing to advise people on how to save. And then agility, one being the fact that we've been given the green light as the first fintech to offer savings as an independent entity, and then to technical competence having founders who have been involved in other fintech products. The big milestone is that in June, we were given the green light to offer this product to the market, which took around a year with the regulator to approve. Our traction so far is that we started building the solution and researching on it in 2018. We did various beta testing phases, the first one being in 2019, another one in late 2019, and then in 2020, early 2020, we engaged the regulator for regulation, and we're happy to announce we were given the green light in June this year to offer the savings. Yeah, and right now we have active users using the platform, and we have also registered in Ghana to offer the service. In terms of market potential, as I highlighted, it overlays on mobile money transactions or people utilizing mobile money accounts. So in terms of people with mobile money or with SIM cards in sub-Saharan Africa, there are 816 million, and they are expected to be 1.5 billion in 2025. However, our sweet spot is working with these numbers, but the ones who have a mobile internet connection or they utilize internet on their mobile devices, because the app is a smartphone app. So for this, we are looking at 272 million, and this number is expected to be 475 million in 2025. Our business model is that we get a percentage of the funds invested, the interest earned. 2 is the fund managers to pay us 1% of the total funds under management. And then 3 is that if for the goals users are saving for, we are introducing them to merchants where they can acquire the services, and for that the merchants pay us a 10% fee for introducing them to these clients. Our fundraising, we are looking at $1.5 million, and this is to enable us to extend our service in most sub-Saharan countries, specifically in Uganda, Tanzania, Rwanda, and Ghana, where, as I have highlighted, we have already set up. This will assist in talent acquisition and sales and marketing approaches in these African countries. Our roadmap is to extend and accelerate our user base in Kenya, where we target 1 billion investment in under a year. We are looking at expanding in Ghana, Uganda, and Rwanda in mid-2022. We are looking at growing savings, so introducing more ways to trigger people to save or to trigger certain behavioral mechanisms that can guide people to save. And we're also looking at partnering with more merchants to offer target discounts to savers who are savings for those particular goals. Our team is very diverse. There's Samuel Njuguna here, that's me, my background being in computer science. Njogu, whose background is in architecture, doing user experience. Data's very experienced in the investment space in sub-Saharan Africa. He does financial modeling. We have another Samuel, background in computer science. We have Patricia, who has done business development. Background is in commerce. And then we have Albert, whose background is in computer science. And with that, I say thank you. Cheers.
Hello, everyone. I'm Patrick Mugambi, founder and CEO of Icarus. We are an African fintech company located in Rwanda, working on a product called Mine that will make group contribution smart. What is group contribution? We all belong to many groups, family, friends, work, fun club, etc. All those groups organize events and activities that require putting contributions together. There is existing limitations on the market. It is still very difficult to collect and manage group contributions efficiently. Insufficient information on the contributions made to all members. Our solution is making super easy and convenient the process of collecting and managing group contributions. Transparency is key here. All key information will be accessible to members in real time. Our competitors, we'll call them, the first one being phone call plus money transfer platforms. The example being a group of people calling each other and using mobile money to collect the contributions. There is social media platforms, plus the second being social media platform plus money transfer platforms. You can use WhatsApp plus mobile money to collect contributions. The third being crowdfunding platforms. Example is GoFundMe. Then there is U+, which is another mobile group contribution platform. Mine differentiator is Mine is an all-in-one platform first that will make it super easy to collect and manage group contribution of any cause. We turn most of our competitors into partners, especially money transfers platforms. About the traction, we don't have traction yet. Mine is MVP ready, and we will launch on 25th this month. Size of the market, we already have 1.6 million Rwandan smartphone users. On the African level, we have 500 million smartphone users, and the number are still growing. On the business and revenue model, we charge 0.5% service fee of each member's contribution, which means if a member contributes $1,000, we take $5. We're actually doing this so that it becomes a way of life, so that if you have 20 groups where you do contribution, all those groups can be using our platform. On the fundraising, we're raising we're intending to raise $100,000 US. We believe it can make us reach up to 100,000 users. And we intend to do that in 4 quarters. The first one will reach 1,000 active users. The second one will reach up to 20,000 active users. The third one will reach up to 50,000, and the fourth one going up to 100,000 active users. We believe that is possible due to the high demand that is there. They simply need a solution like ours to do that, to be able to put the contribution and to live that smart life with group contribution. I think that's all. Thank you for your time.
Hi, my name is Francis Magatambola. I'm a CTO and co-founder of Kikoba, where Kikoba is a digital platform for helping saving groups record, manage, and give out loan in the easiest way. In the most of the African country, we have seen group saving increase in a highly exponential level, where they're all still facing the same problem. They don't have enough data to support them in terms of them accessing financial services, and don't even have tools to analyze the data that they have collected, seeing how the group is been increasing in terms of growth or decreasing in terms of them losing the money based on the loans that have been giving out. So we decided to solve this problem by creating them a digital mobile platform that will help them access the data in real time. So we have created a mobile platform that give them access to analytics tools, marketplace that they can access financial services, products that have been giving out for saving groups. And in the market currently in Tanzania, we have a couple of competitors who have been operating in terms of solving the problem that we have seen currently increasing exponentially. And also the market itself for saving groups in Tanzania, we can see that we have total members over 600,000 members, and most of them are women, where over total of the 500,000 are women just participating in the village saving groups. And in Tanzania, there are over 30,000 groups only. And that based on the data that was collected last year on fintech, in the fintech growing space, but which was conducted by FSDT, the FinScope report. So the product that we have developed will help the saving groups to maintain and see the overview of what is currently happening in the group in terms of creating the members' profiles, seeing the payment history that has been occurring, collecting weekly payments, and even loaning, creating loan request. So our business model is mainly for now is to at least acquire 5,000 members, and whereby we'll be charging them $7 fee per month, which will be subscription based, where we're looking at a revenue of 1.2 million a year. And the competitive advantage that Kikoba has on the market is we'll be the first in market to actually deploy a digital solution, where most of the solutions that have been deployed on the ecosystem that have been USSD based and PayPal based. And also we have been positioning ourselves creating a highly memorable brand by having a highly skilled team working on our designing phase. And also we provide them with real-time data that most of the VLC were missing in terms of accessing their financial information. And currently our roadmap is we are at a stage where we already have a stable bookkeeping tracking app. And we are hoping to launch a marketplace by September, where groups can actually visualize and see what banks and other potential partners are offering on the platform in terms of financial products. And currently, we are looking for funds in terms of 60,000 USD in order to increase our operations, where we're looking at least to have 80,000 transactions on the app, which will help us to reach the targeted goal that we have in terms of us building the product a little bit more better. And the ask is basically to increase our development team, having a little bit more marketing budget. And as you can see, this is our team, where Andrew is our CEO and co-founder, and Francis Magatambola, who is me and the CTO of the team. And we have Liam Talo, who is the data analyst on the team. Our team is highly skilled, where we have worked in various companies in the ecosystem, where Andrew is highly focused on the banking industry. And I myself have been working as a CTO and product development lead in most of the techie space in Tanzania. Thank you. And for more information, please visit and scan the link to get access to Kikoba waitlist so that we can be a part of the development cycle that we've been developing. Thank you.